Hello, I'm Jonathan Friedberg with Aberdeen Funding, and I thought today I would give you a brief introduction into what factoring is. It's a strange name for an industry that's been around for a long time, and most people I've come across look at me blankly. So let's take a practical example, and you'll get an idea of what factoring is all about. Now, let me say that factoring provides your company with working capital. It's very much like borrowing money from somebody. But how does factoring work? So let's assume for a moment that you have an office supply company, and your company supplies office materials to big box stores like Office Depot, Office Max, Staples, and so on. And you get an order for $10,000 worth of your office supplies that Office Depot wants to purchase from you. So let's assume that on the first of the month, your truck drives up to the loading bay at Office Depot and offloads the $10,000 worth of office supplies. Under normal circumstances, you would issue an invoice, and Office Depot would agree to pay you within whatever credit terms you negotiated, 30, 60, and so on number of days. The problem is it's the first of the month, and you know that within a week or so you're going to have to pay rent, you're going to have to make payroll, and it's really an inconvenience for you to have to wait the 30 or 60 days for the check to arrive for you from Office Depot. So you come to Aberdeen Funding, or a company similar to mine, and you offer to sell that invoice to us. Because Office Depot is a creditworthy, strong financial company, we decide that this is a good idea, and having gone through all the procedures, which are the subject of a different video on a different day, we would advance to you, for example, 80% of the face value of the invoice. So within a couple of days of your delivery, you're sitting with $8,000 in your bank account. We together instruct Office Depot to make payment to us, and we wait, not you, we do. Within about 30 or 45 days, we receive a check from Office Depot for $10,000, and out of that amount of money we recover two items. Clearly we recover the amount of $8,000 that we gave you some time before, and because this is a for-profit organization, just kidding, we take out of the $10,000 a fee. Let's assume that the fee for giving you this money up front is $200. So out of the $10,000 we retain $8,200, and the balance of $1,800, which in industry terms is called the reserve, is then returned to you. So over the full cycle of this transaction of $10,000, you've received $9,800, and you've paid us $200 by way of fees. Now that's it, it's simply. Let me add a couple of issues because I don't want to bore you for too long, but in addition to giving you the money, we actually monitor your outstanding receivables, we follow up on delinquencies, and we also assess the creditworthiness of your customers with a view to giving credit lines. So if this sounds good to you, give me a call.